The banking fallout continues as the American government tries to orchestrate a rescue of First Republic Bank with the aid of the nation's biggest banks joining in a public-private partnership that could result in about $30 billion of deposits, I'm told. Joining us now, Herman Chan of Bloomberg Intelligence. Herman, is this going to be enough?
I think so. I think what the government, in conjunction with the private sector banks are doing is drawing a line in the sand, saying that SVB happened, Signature happened. We're not going to let First Republic become a failed bank.
So the wording here is interesting because we're talking about capital infusions, we're talking about liquidity, we're not talking about an acquisition yet.
Correct.
Do we get there?
I don't think so. The reason why it's structured as deposits is to really shore up the confidence that for the remaining First Republic depositors, trying to tell the story that if the largest U.S. banks like JPMorgan and Citi and Morgan Stanley and Wells Fargo and PNC and Bank of America are looking to put their own money at stake in First Republic, then everybody else should be able to sleep soundly with their money at First Republic as well.
And how does that have a ripple effect across some of the other banks as well? Is this kind of, in some ways, safety or assurance for the likes of PacWest, for Western Alliance even, that if First Republic can navigate this, then we can too?
Exactly. This is shoring up the confidence for the entire regional banking space. Hopefully, the markets can breathe a sigh of relief and go on and understand that the government and the largest U.S. banks are going to shore up the stability of the regionals.
Yeah, and we should mention, as we're speaking, First Republic Bank now pairing some of those initial gains. It looks like that halt has come off. We are now higher by about 14%. So pairing some of the gains, we're trading at about just shy of $35 a share. So when we talk about some of these regional banks, then we're talking about PacWest, we're talking about Western Alliance. Western Alliance got a 5.3% stake from Citadel's Ken Griffin, of all places. If you've got JPMorgan, Morgan Stanley, and others already helping out First Republic, is PacWest next? What are we looking at here?
I think the inference is that if JPMorgan and the largest other U.S. banks are going to help out First Republic, it's just a sign of confidence overall. I don't think they need to do anything else and to dip into Western Alliance or PacWest or any other bank that is viewed as potentially vulnerable. It's more of a fact that this is a decisive action by the government in conjunction with the largest banks, and that should shore up the confidence in the entire system.
All right, so we got to talk about management here because, of course, this is a rising rate environment. A lot of folks are talking about on the trading side that the folks who are managing millions and millions, billions, even trillions of money have never witnessed this kind of aggressive hiking cycle, upside from 1994. But the folks in the C-suite of these regional banks, are they prepared for this?
Well, I think it's a rude awakening of what the market reaction is if there's taking too much duration risk. So the issue now going forward is that interest rate risk, you have to manage it much more conservatively, and that's really going to be the name of the game. It's going to mean net interest margins are going to be contracting and not be as aggressive with your interest rate policy in terms of investing in securities and doing fixed rate lending.
See, that long duration risk, it's fascinating to me because on the one hand, we kind of knew this was coming. The easy hedge was to short the front end, which a lot of people did, but a lot of people didn't. Interesting time in the markets. Herman Chan of Bloomberg Intelligence, we thank you as always.